Welcome back to Storm Stock Solutions. I'm Grant Mercer. It's pre-market on this Monday, and we've got a classic cross-currents setup. Single stock and sector headlines are busy, commodities are swinging, but the macro calendar is relatively quiet. Let's bring some clarity to the chaos before that opening bell. Let's start with the key drivers for the tape this morning. According to reporting from MarketWatch, Walt Disney is front and center after posting solid revenue gains and slightly better than expected adjusted earnings per share, but lower net profit as costs creep higher. Think of this as a good top-line, noisy bottom-line quarter. Traders will be watching how the market weighs strong theme park and content revenue against margin pressure from higher expenses. Over in big cap tech and AI, Oracle is making waves with an aggressive capital plan. As MarketWatch highlights, the company is looking to raise as much as $50 billion this year, on top of an $18 billion bond deal last fall, to lean even harder into AI infrastructure. That kind of fundraising tells you management sees a long runway for AI demand, but it also raises questions about dilution, leverage, and return on that capital. AI remains a core theme, but the market is getting pickier about who spends and how. At the same time, NVIDIA is injecting a little doubt into the speculative AI story. Emily Berry at MarketWatch reports that CEO Jensen Huang still plans to invest in OpenAI, but he dialed back expectations on the size of that commitment, and tech stocks are wobbling on the news. In a jittery tech tape, even a slightly smaller AI bet from a bellwether can cool enthusiasm at the margins. Now, let's talk about areas of strength traders are watching on the upside. Disney belongs in that camp this morning. Yes, net profit missed, but the combination of record theme park revenue and better-than-feared adjusted earnings can be enough to support the bull case that the turnaround in experiences and content is still on track. The question into the open is whether buyers treat this as cost issues we can look through, or a reason to demand a discount for uncertainty around margins. On a more personal finance note that indirectly ties into housing and consumer sentiment, MarketWatch runs a widely read column about a 40-year-old who inherited $400,000 and is debating using it to buy a house with her fiancé. While that's not a stock story, traders do pay attention to these kinds of narratives as a field check on how confident households are about big-ticket spending, housing, and long-term financial planning. Strong engagement in housing-related content often mirrors the debate around whether higher prices and rates are cooling or just reshaping demand. On the flip side, we have some very clear weak spots and areas to handle with care, starting with precious metals. Barbara Kallmeyer at MarketWatch notes that gold is now down nearly $1,000 from its peak, and silver is trying to stabilize after a record 31% slump. That's a serious drawdown, not just a little pullback. For traders, it raises questions about forced selling, margin pressure, and whether the safe haven narrative is giving way to a broader unwind in crowded trades tied to China and macro hedging. Volatility in metals can bleed into miners, emerging markets, and even sentiment around inflation expectations. Crude oil is also under pressure. Another MarketWatch piece points out that oil prices are falling sharply as tensions between the US and Iran ease, and some of that geopolitical fear premium gets pulled out of the barrel. On top of that, there's spillover from the turmoil in metals. Energy equities and high-yield credit tied to shale producers are areas that can get shaken up when crude reprices quickly. These are themes to treat with some caution early today, especially if we see another leg down in the futures. Let's move to the under-the-radar setups and stories that could matter more as the day evolves. In energy, there's yet another big oil and gas merger. Devon Energy planning to acquire Coterra in an all-stock deal, as highlighted by Tommy Kilgore at MarketWatch. Shareholders, at least initially, are not thrilled. That's important. Consolidation can be bullish for an industry over the long run, but when the market pushes back, it often suggests concerns about deal price, synergies, or simply fatigue with management using stock as currency. I'd put the broader oil patch consolidation story firmly on the watch list this week. In tech, Europe's regulatory drumbeat is getting louder. Jamie Chisholm at MarketWatch reports that Europe is effectively building a kill switch for US tech as it pursues more tech sovereignty. Zoom and Microsoft are named as companies that could lose business if European clients pivot to local or more tightly controlled solutions. This hasn't been fully priced in, according to the strategist quoted, and it's the kind of slow burn risk that doesn't move a stock in one day, but can reshape multiples and growth assumptions over time. And then there's crypto. Steve Goldstein reports that Michael Saylor's vehicle, Strategy, has seen its Bitcoin holdings briefly trade underwater relative to its purchase price. For a figure often associated with permanent bull conviction in Bitcoin, that's a psychological milestone. It underscores the unwind we've seen in crypto assets this year and puts a spotlight on leverage and risk management in that corner of the market. Names tied to Bitcoin balance sheet strategies could see added scrutiny if volatility persists. So, to frame the session, we're heading into the open with company-specific catalysts in Disney and Oracle, a more fragile tone in high beta tech around Nvidia and European regulation, and significant stress in metals and some relief in oil. Traders will be watching whether early money leans into AI and consumer names, or hides from the crosscurrents in commodities and crypto. I'll be back with intraday updates once the market is open to track how these themes actually play out on the tape. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Stormstock Solutions, I'm Grant Mercer.